But auto stocks, they are the flavor. The monthly auto sales have been announced. So let's quickly take a look at 3-4 stocks. Starting with the first, Tata Motors. We go to Bajaj Auto, good numbers, a beat on the estimates. And then again, we go towards some more numbers again, bring Maruti also. And then the last one, Escorts. We'll talk about that here. So that's Bajaj again. Now bring Escorts on the screen. Escorts number, actually the street was expecting slightly higher numbers. The numbers actually were not able to meet the street estimates. On the face of it, again, the numbers which has been announced by the company, domestic numbers, YOY, almost down 1% in March. Export, a growth of 103%, but the base is very low. So overall, total growth of 1% versus the last year. Now let's understand what this implies for the company, how's the trend looking, and let me now welcome the management, Bharat Madan. Bharat, good morning and welcome. Let me first ask you, fourth quarter looks good. Domestic growth 5% versus the last year. March looks a bit tepid, decline in the terms of domestic numbers 1%. What has been the reason for that?
Well, I think main reason was because of the festive period, which is shifted to April, so which actually led to slightly slower retail demand, I think, in the month of March. But in spite of that, I think the kind of number which has come out and looks pretty decent to us. I think 10,000 plus number, especially without a festive month, is totally unheard of. So I think with that way, I think we are very happy about it. And generally, I think the demand on the ground remains strong, so we don't expect really to be any concern as of now, especially the stronger market in the northern India are doing pretty well. And that being the Rabi season, so we expect the quarter one should also deliver a decent double-digit growth for us.
Right. The last time actually we talked to you last month, Mr. Madan, you highlighted that there was demand traction in central India. Geographic trends were looking good. Which part of the geography at present the trends were on a very positive side, and where you are looking for a slowdown?
Well, if you look at month of March, definitely across all, I think states, most of the states have actually shown a declining trend. And because, like I said, the main reason the festive season shifted happened to April. But generally, if you look at the northern market, the decline was much, much lower at only, 7% compared to the southern and western market, which declined by almost 27%. So, which is the same trend which we've been seeing in the last 3-4 months. So, the same trend continues. We have seen markets like entire rural belt of UP, MP, Bihar, Rajasthan are doing extremely well. And we expect the same trend will continue unless to Q1 of this year too, which will probably show strong momentum compared to the market in the south and western area.
Right. So let me confirm that you're saying north is slightly sluggish, south is central is good, like last month again. So a trend remains same. South, is that also you're saying there is a sluggish trend at present?
Yes, south and western markets are declining for the last 3-4 months. With this kind of winter, it has not been good in that area, and that peninsula is totally dependent on rains for irrigation. So those markets have not done well, but the northern and the central India is doing better.
Right. And Mr. Madan, let's also talk about the inventory levels at present. Now, this is the tractor segment. Again, your segment is different. We have observed for the two-wheelers, the passenger vehicle, cars, again, that segment has been seeing high inventories. How's the inventory situation for you versus the last 2 months, and how you're looking from the point of view as a trend for the next quarter?
So generally, inventory level at the channel right now is not very high. We less than 4 weeks of inventory as of now as we speak. So, and looking at the fact that there's the festive season now coming in first week of April, so obviously those levels are not very high as of now. And normally we used to have normally 4 to 6 weeks of level of inventory. So compared to that, we are at a very low level even now. And then looking at the fact that again Q1 is likely to deliver better growth numbers. So I think within the end of June again we should be back to 3.5 weeks of inventory levels.
Well, less than 4 weeks of inventory is not a concern at all. So then there should not be any major incentive for giving discounts. So what's the discounting trend? Secondly, I want to ask you, price hikes, are you seeing any need or any sort of intention for hiking prices going forward over the next quarter?
So there may be some impact because some inflation has been there on the steel prices, especially after the go onward. So what's not very significant, so because unlike what we have seen in the last 6-7 quarters, where the quite increases over to the scene of 5-6%. So we've not seen that sort of impact. Now, the commodity prices slightly stabilized now. So yes, after looking at the competition, how they really react in the industry, so we may look at some minor price increase in this quarter too.
Right, and that price hike, as you just cited again, there has been an increase in the raw material prices, that price hike, is the quantum needs to be between 0 and 5%, or you expect that to be at the higher sort of single digit numbers?
No, no, increase will be much, much more. Just like you said, already in the last 6, 7 quarters, we've seen the price increases which are upwards of 5 to 6%. So now the increases in the steel prices are not that much high. So it will be very normal increase, maybe less than 0.5%, which may happen if it happens.
Right, and as always, we ask you market share trends. What are the market share according to you again from sort of estimate basis in the March month, and how's it looking? Given the way again you would be allocating capital, or I should say capital allocation would be happening with respect to the market share trends for the next quarter also. So update on market share, any particular geography you want where you have gained a material market share.
Well, I think if you look at the Q4 number, was March will be very skewed number. So March, the market share is extraordinarily high at 18%, so which is I think very skewed because one particular month. But if you look at the Q4 numbers, so last year we had 30% market share, and this year we have gained 2% market share in March quarter. So we are today at about 15% market share in the Q4. But overall, if you look at the full year number, we gained market share by about 110 basis points. We are at the full 11.8, 11.9% sort of market share on a full year basis.
Right, that's the word on market share. And since we have closed FY19, we have started the April month FY20. Mr. Madan, what are thoughts on the capex for the full year FY20? How are you looking for the full year FY20 in terms of earnings growth or in terms of volume growth versus the year gone by FY19?
Well, the capex fund we are estimating, I think this year in FY20 we'll have an outlay of somewhere between 250 to 300 crores. There is a major spend happening on the capacity expansion now, which will get completed in this year. So that sort of capex will happen. Plus there is some investment which we are intending to do in the JV with Kubota, which we announced last year. So the second part of it, capitalization actually happened in this year, which will also go. And generally, I think on the top line trend, I mean, we expect we should do better than the industry numbers. So look at our, like you said, about FY20, we will really look at the market share number of about 15%. So we are still ending this year at close to 12%. So obviously our growth trajectory will be maintained, and we expect the momentum to continue in FY22 with the top line growth happening there. And on the margin front, generally, we are seeing some improvement in the margin in this year. And next year also, our focus will be to continue improving on the margin from where we ended this year. So maybe 50-60 basis point improvement possibility remains for this year too.
Mr. Madan, it was a pleasure talking to you, and let's hope again this time also we have a very good monsoon. All the wishes to you for FY20, and that was Escorts management giving us a good view in terms of the volume growth. The demand trends remain the same. A bit of sluggish demand in north, west, south. Again, there has been a decline. Central India remains very strong. The stock has gained almost 7 to 8% over the last 1 month. Monsoon forecast is now the next trigger for this sector, and that's something I think which all the investors are going to wait for. But with that, now we come to the end of this edition of Corporate Eye. Thank you so much for watching us, but stay tuned as after the break, lots more lined up on the other side.